Good morning friends. Today I am going to show you the fundamental analysis of JMC Project India Limited. So this company was actually a construction company and established in 1986, and it is a Kalpatru group company. Okay, and company has a construction landmark in highway, flyover, township, hospital, industrial unit, power plant and across the country. As the country is developing, this company share will also improve in the coming days. So this is the website of the company. You can see the companies are having different kind of businesses in the building, infrastructure, industries and power. You will read about more about in the coming. So right now the current market price is 1800. Market cap is 1813 crore and current price 108, high price 118 and low price 65. Stock P 18 and book value 31.4, dividend yield 0.93, return on capital employed just 14, return on equity 22.9, face value 2 and PEG ratio 0.52, showing a very high indicator of going price movement of per direction. And equity capital is 33.6 in current ratio 1.06 and PEG price to book value 3.44 and growth factor 3. So this is the one concern for this company. Growth factor is very low and return on asset is 0.75. Altman score is 194, which is not considered as a good Altman score, which is maybe is down, is below than 3 is not a good sign Altman score. And different in VI is 16.47 is talking about the company's intrinsic value is basically higher than intrinsic value right now. Number of shares is 16.8, before 10 years also 16.8. The company never changing their fundamental 1.0, and EPS is also improved. The 10-year sales growth is 10%, 10-year profit growth is 9.88%. So what you can say, this is a company showing a very good value. So you can say how companies price is fluctuating a lot. But it is related real estate, so please be cautious about it and check with your advisor before taking any decision in this company. Company is expected to give quarter. Company has maintained a healthy dividend payout. What are the cons for this company? Company is trading at 3 times of their book value and low interest coverage ratio. Company has low return on equity is 5.75 and contingent liabilities 1436. What are the different company? You can say the companies are having same business like whatever the KNR construction, NCC and Microtech developer are doing. So now talk about this particular, the overall company's return in June 2019. The sales were 1947. Now it is 1672. So sales are growing exponentially. There is no doubt about it. But there is a challenge at a operating margin level. There was 13% margin in 2019 June. Now it is still 9%. The margin are having very challenging for the company. Okay. And then you can, if you talk about the overall company's interest, the company paying interest consistently but flat. If you talk about profit, the company is not in the profit too much. That is the one more concern also. The profit is that flat or negative. But there is a chance of increasing the particular because of the lot of development in the country. If you talk about the overall sales, 10-year sales, like you talk the 2011, the sales was 1378. Now it is 6,000 crore, which is very good. And if you talk about the profit, this is the only challenge here. The 8% margin, now it's 8% margin is still there. Now if you talk about the other income, so other income is also negative. Interest, company paying interest, this is one concern. Company interest is growing. Interest will grow because it's in construction business. They have to take loan and they have to work accordingly. But yeah, now next is the net profit. If you talk about net profit is increasing or maybe it's flat since long time. If you talk about compounded profit growth, so is 36%, CAGR 5% and return on equity 7%. Now what is the capital, equity capital? This is one of the positive sign. Company never increased their too much capital, equity capital. Still since after 2016 it's 34 crore to 34 crore till now. Reserves are growing, not exponentially, but it is something of flat growing of the reserve. This is the one concern for the company. Borrowing also increasing slowly because it is working in the construction business, so they have to increase their borrowing as well. According to, they have to take loan and work construction activity. Inventory is also, you can see 310 and trade receivable 1008, cash equivalent 245, loan and advance 2160. And total other asset items 232. Overall assets are increasing slowly in this company. Cash is company maintaining something good cash here Debtor days flat, and inventory days also you can see improving, and number of days payable also improving. Cash conversion also flat, you can see working capital also improving. Return on capital also showing 14%, which is a good sign. One of the positive sign, company's promoter are never changing their position, which is promoter is only one, Kalpatru Power Transmission Limited is holding 67.75%. FI increased their position and DI also increasing their position. So this is a very good sign for the company in the coming days, because usually FI and DI is very basically doing lot of analysis before investment. But please check with your advisor before taking any position in this company, JMC Project Limited. Thank you for watching this video. Have a nice day.